Does Tesla matter for the overall market, or is Tesla just a Tesla story?
I think Tesla, for the overall market, is the poster child for the irrational exuberance of 2020 and the stocks that are irrationally exuberant. Not all of them. Thank you.
You and Greenspan.
But I think Phil's... Thank you, yes. Market historian here. But I think Phil just said something that I thought was really interesting, which is that people have moved into Tesla ahead of fund managers moving into Tesla, ahead of Tesla being put in the S&P 500. Well, that might work for a trade. That is a rotten way to invest. You should invest based on earnings, cash flow, revenue generation, not based on someone else doing something based on someone else doing something. So I think it's the poster child, and it's important for this thought, but not for the market going higher in the long run, and not for the stability and the safety of the market.
So I'm just a wild stab that Tesla is not your only stock holding. Your family future and your children's college funds are just in one stock, Tesla.
I'm a long-only investor, and Tesla makes me wish I could short. If I could short, I would short it, and I'd be very loud and proud of my short in Tesla. I would have a lot of fun shorting it.
Oh, wow. There you go. Bigger than, I think, all the U.S.
Yeah,
car
not that I
makers
have a strong
combined.
opinion.
No, not that you have it, but that's why we love you, because you do not have that strong opinion that you would short it if you could. Let's talk about the banks.
Right.
People have made money shorting the banks this year. Wells Fargo's lost half its value, sitting on $20+ billion in collateralized loan obligations, mortgage deferrals. Do you own any of the banks, and what are you watching most closely for some of these bank and asset management earnings that are going to cross this week?
Right. So we don't own the big banks. We do own 2 small regional banks. But what I think was really interesting was actually what happened in the market yesterday. So as we saw that reversal around 1 p.m. when those negative headlines came out, the banks that had been negative all morning actually started to pick up steam. And I wouldn't be surprised if they start to get a little deserved attention. These things are down, as you said earlier in the program, 30–40%. They're trading at 10 times earnings. And you know what I think is really interesting is, well, the earnings are going to be down 65 to 70% year over year. The earnings are still positive. That has not historically happened in major market declines in the past. And I think what it shows us is that there is resilience, that there is security and safety in these. And at 10 and 12 times, knowing that, and so by the way, as they come up on earnings in the next week or so, what we're looking for is the actual earnings number, adequacy of loan loss reserves, adequacy of capital. But as you said earlier too, most importantly, we're listening to what the CEOs have to say about both the bigger picture of their businesses and the macro economy. And as that information starts to come out and people realize that the banks aren't dead yet, and that in 2022, 2021, 2022, earnings are going to be maybe even ricocheting off of these very, very low bases. Perhaps there will be a reversal of the loan loss provisions, and they'll actually have really good earnings. They could be the stars in 2021 and 2022. So I wouldn't be surprised if what we're seeing is some love and some appreciation starting to come into the banks. They are great companies. They are well managed. They're secure. All we did coming out of 0809 was prepare for the next banking crisis.
Yeah, but you don't own them yet. Quickly, kind of like a final trades type thing, if that ever existed on TV. Most exciting new investment that you've made recently, Jenny, is what?
Okay, the most exciting, which isn't terribly exciting, is National Retail Properties, which is a triple net lease REIT. But if you need one kind of final trade, I would look at my regional banks, which are Umpqua and PacWest. I think that the regional banks, you can be really targeted, you can understand what they're doing, and you can understand that as mortgage rates are booming, those regional banks might benefit disproportionately.